Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, so we're gonna hop into the charts in one sec. First, let's talk about the upcoming news. So we got news coming in tomorrow, and then we have big news coming in for the rest of this week, really. So every day until the end of the week, we have big news. So starting off tomorrow, we have the FOMC meeting minutes. So we're going to get a good idea of where the Fed's head is at as we go into March. So this is going to be very important, and this will lead to a lot of volatility in my opinion. So look forward to that in the afternoon tomorrow. And then the 23rd, so we got the initial jobless claims, we got the GDP numbers, we got crude oil inventories. So these are going to be pretty big. The crude oil inventories, again, don't directly affect the markets, at least not in real time. If you're an oil trader, you definitely want to keep your eye on it because that will have an effect on the oil price, the oil chart. But the actual general markets, not so much. The jobless claims and the GDP numbers, they will. So we're going to keep our eye on that in the morning. And then the 24th to close out the week is very, very big with news. So we have the consumer spending numbers, we have the PCE price index numbers year over year and month over month. We have the core PCE numbers for year over year and month over month. And then we have the University of Michigan sentiment. This is going to move the markets for sure. And then we have the U.S. new home sales. So it's going to give us a good idea of what's going on with the housing market in the U.S. So this is going to be a big, big day to close out the week. So we want to make sure we keep our eye on in the morning for all the news that drops. Okay, so watch out for the rest of this week. Expect a lot of volatility and make sure to have an umbrella. Keep your jacket on. It's gonna get windy and potentially rainy. All right, so let's get into the chart, starting with the dollar. So we had a nice little up day today. So far, we have hour 30 left in this candle. So far I'm liking what I'm seeing for more upside. However, it has a lot of work to do to reclaim this wick. Okay, so I am looking at the dollar to continually trade higher and then try and threaten the high of this wick. Now it could turn over any point and break down back towards this ascending trend line and still hold and then lead to more upside. So like I've been saying, I'm short term looking for upside, maybe a minor drop, but overall I'm still looking for upside to come and then get towards the descending trend line that is here. And then from there, we'll have to wait and see the price action if it's going to lead to an actual breakout or a breakdown. Okay, so I got to be patient with the dollar, but I am looking for a minor pullback until we take out this high here, and then from that pullback, a move up higher. Now we could just move up higher without the pullback, that's fine too. But the point is, I am still more bullish in the short term to midterm, and then, or rather I should say the short term, but midterm I am looking for more downside. So in the next coming months, I am looking for the dollar to break down after it has its rally, could be to here, could be higher. Okay, and then break down again to come back and test this trend line again and eventually break through it and break back down towards 100. But once we're down here, once we grab the liquidity under this level here and really start trading down into this level, I'm going to be very bullish, as I am long-term bullish on the dollar, like I've mentioned. So looking for short-term retracement to then a rally up, or we may just skip that retracement and go up, but then we should find some major issues as we come in towards 105, 106, potentially 107, and then pull back from there. Again, we'll have to wait and see what the charts do and enjoy the ride. Next is Dow. So we're going to look at the Dow. Dow is finally breaking out of the triangle structure. So it's looking like it's made a decision. And this is also giving us a good look in that the dollar may continue to strengthen as the Dow continues to weaken, right? So just to make clear, in case you're new here and you don't know my definition for a breakout, I'm very conservative when it comes to breakouts of structures, of trend lines, whatever, with levels, whatever you want to call it. I don't look for one candle. So this is the beginning of a breakout structure. For me, it'll confirm once another candle, another daily candle closes under this low. Okay, I'm like this because it helps protect you from fake outs most of the time. Sometimes you'll still get caught, but it's a very conservative way of looking at breakouts, and it'll get you out of hairy situations if you're trying to be a breakout trader. You may give up a little bit in better positions, but at least you do lessen the risk of being faked out from a move. So if we have another bearish day tomorrow, which it's likely considering how this looks, and we close under this level, I will say the breakdown is confirmed. And then we should look down for this low here to get taken out very quickly to grab the liquidity there, and then really a breakdown all the way towards this fair value gap over here, and potentially targeting these lows to grab the liquidity under there, which happens to coincide with this descending trend line and these fair value gaps down here. Okay, now this may lead to more downside, okay, where we just continue the macro bear market, or we're going to be building out a higher low. In my opinion, we'll probably be building out a higher low, and then we're going to try and see, are we going to have that continuation higher, or are we going to have another large consolidation structure where we make another lower high from these highs here, and then start something else where it could be a tightening structure like here that may lead to more upside, or it may have a bearish character and then have probabilities that aim towards downside. Okay, so we have some time here to observe price, but right now I'm leaning towards downside, obviously, to come all the way back down towards these fair value gaps, unless the dollar gets weak very quickly. This looks like the most optimal path, in my opinion, or most probable path, I should say. Next is S&P. So S&P is following the doodles so far, should break down towards 3,900 to 3,920, and then if the Dow can find any support as it comes into those lower pivots, then we'll probably see a bounce from here. Okay, but overall, S&P is following the plan. Eventually, it's going to come towards, if not right at, this descending blue trend line. Next is NASDAQ. So NASDAQ filled out this bullish fair value gap. We can actually take this off now as the candles completely traded through. It's very likely to close, and it closed through it as well. So now look for continuation down. And like I mentioned in the last recap, the NASDAQ has had a much more aggressive pull up, far more impulsive. So look for this to have a much more steep drop compared to the Dow and the S&P, and I am looking for this fair value gap first, and then potentially even taking out this low here to grab any liquidity under this pivot here. Okay, so overall looking pretty good. I am looking for higher low structures to form on the indexes, as I don't think the rally personally is completely done yet, but again, we'll find out. Next is oil. So oil, let's take a quick look at oil. Oil to me is, again, we may be going into this triangle structure, tightening structure. It's very early on. Again, I'm not saying that's exactly what's happening here. We're going to find out. I do foresee us kind of trading within this bullish fair value gap zone as we have been, and as we come into 75 bucks again, we're probably going to find some demand here. We'll have to wait and see what's going on. Right now, it's a no trade for me. I don't really see any opportunities while we're in this structure. I'd rather just watch price action, let it tell me what it wants to do. I do have a bit of a bullish bias in the midterm. Short term, I'm getting a little bit more bearish, but in the midterm to long term, I'm quite bullish. Especially long term, I'm very bullish actually. Okay, so while we're in this structure, potentially a triangle, potentially something else, we're just going to give this some time and see what price wants to do. Next is gold and silver. So playing out the pullback as expected, and I do think this is going to come down even lower, back towards 1800. Now, I would ideally, if I was looking for a very bullish structure, it'd hold 1800. Now, it looks like, in my opinion, if the dollar does start breaking past 105, potentially going towards 106, this level holding is very unlikely. That's when I would look for this consolidation to get attacked and potentially pull back all the way down to these fair value gaps down here at 1750 to all the way down to like 1720-ish. Okay, so if the dollar gets really strong and starts breaking past that descending trend line I showed, breaking towards 105, 106, that's when I would look for gold to have a far more significant retracement beyond this level and go down towards these bullish fair value gaps. And even then, it's still bullish, okay? You're just having a much steeper retracement after a massive impulsive move up for gold. So this makes sense if we break this hard, especially if the dollar is getting stronger, but I would not turn super bearish. If you wanted to go short, obviously this was the play up here. But overall, I'm liking what I'm seeing from gold. I'm going to watch as it comes into 1800. If I see that it's strengthening or it's slowing down the selling, I will definitely start to contemplate taking a stab at a couple of longs in GLD, maybe a couple gold miners. So I'm looking at gold and I'm getting far more interested in the price. It's just a little too expensive for me right now. Make sure, if you are interested in trading with me, following the swing trades, or trying to join the day trading room, join the Discord or look at my Patreon. You'll find all the information you need for those services. We've been extremely good over this last year, essentially. We've actually had one loss in crypto and one loss in stocks in the entire year. All the trades are posted in the Discord for you to look at. Next is silver. So silver into this bullish fair value gap, and to me, showing signs that it's going to start trading sideways and go into consolidation and potentially lead to a breakdown. A breakdown further down towards potentially like $20.50, $20.60. So we are seeing signs of a slowdown after this rise. You see this doji here. We may get a continuation down here or another doji. If we do, the probabilities do increase that we're going to try and attack this pivot down here and break lower and break under this consolidation here, which would bring us towards this bullish fair value gap. So silver in the end is just following gold, and if gold continues to weaken, as I see it probably will, so will silver. Okay, so just continue to watch silver as you're watching gold, and whenever you see gold showing signs of strength, silver will follow. Next is Bitcoin. Let's take a quick look at Bitcoin, see what's going on. So pulling up Bitcoin. So Bitcoin is looking quite interesting. Had a very strong day yesterday and is having a very weak day today. So this is clearly a fight going on between the bulls and the bears. You know, we're trying to find who's going to have control in the coming future. So right now, what I'll tell you is this structure tends to lead to downside, okay? And this line right here, so 23,955.86, this is the monthly high. So last month's high, this is the level, and I've said in a couple recaps and a couple streams on the Discord, hey, you know, watch this level. This is going to be the level where price is likely going to oscillate around until the end of the month. So that's pretty much the end of this week. I don't foresee us breaking too far away from this level. Now we may come back down towards this fair value gap, but look for us to oscillate around this level as we come into the end of the month. Now, as you know, if you are in the Discord or you've been following me, you know we in the Lemon Garden, people in the swing trade service, we've been long Bitcoin since about 18.3, so around down here, and we've been enjoying the long. We've taken some profits as we've gone up around 20,000, and right now I'm eyeing it very closely. If I see at the end of the month that we close under the monthly high of 23,955, I'm very likely going to close out the long, because the probabilities do increase quite high that we do have a retracement back. The reason why is you'll have this impulsive move, which just was incredible. If you close under this level, and it's a significant close, you know, coming down towards 23,500 around there, you're going to start looking like a doji candle on the monthly. And in my opinion, it's best to just get out of that, because you'll likely have a breakdown. Okay, now it doesn't mean it's going to be bearish, but it is going to be a breakdown within the month. It could be early in the month, late in the month, and you'll likely get better prices, and that's my plan. If I do see that happening, I'll look to close out the long in great profit, and then I'll look to potentially load back up on a long if price tells me to, okay? So I am eyeing this very, very closely, but it is performing as expected. The weekly, last week's candle was very strong, and this weekly candle is going to try and fight to hold the monthly level, but it's going to be quite hard for it to actually stay above it throughout this whole week. I am expecting price to break down under this level at some point, whether it's today, tomorrow, or Friday. But I am looking for price to break down. But by the end of the month, if we're not back above this level, that's showing serious weakness. And on the daily, it'll be probably portrayed in a very bearish structure as well. Okay, so if we do happen to have that sort of structure where we do close under here on the monthly, look for these levels down here to be the next target for Bitcoin as it retraces further down. Okay, now this doesn't mean it's going to get bearish where we're going to take out the lows and continue the bear market. It may, but it doesn't mean that. What it does mean is we're going to have a larger pullback to break the impulsiveness of the rise we just had, and then try and create a higher low somewhere down here, creating a larger bottoming structure potentially, which would look something like this, like a inverse head and shoulders. My apologies, I'm just clicking all these buttons right here. So you'll have an inverse head and shoulder structure potentially form, and then if that succeeds, look for continuation. Now this to me is the least likely structure, mainly because I am not that bullish on the equity markets going into pretty much the last half of the year. So as we get towards Q2, middle Q2, end of Q2, I am not that bullish on the equities, so I can't be that bullish on crypto either. So if we're going into those time frames, it's going to be very hard in my opinion as of right now for Bitcoin to have a bullish structure and then play it out during that time period. Now, it's just my idea. I'm not really trading the idea. It's just my forecast. It could be wrong. It may very well be wrong, or it may be right. Either way, if we are going to have continuation up, I would think that it'll be quite quickly, and that this monthly candle that we're currently in, that's about 8-9 days away from being completed, will not show any signs of major weakness, will not show signs of retracement, will show signs of continuation. Okay, it's very important if you want a move that's going to continue for the rest of pretty much Q1 that we don't have a weak month candle close here. It doesn't mean that even if it does close here weekly, doesn't mean that it's going to be a definite where the next monthly candle is going to be weak, but the probabilities do increase quite high that it will be weak. Okay, so I think that's it. I think I've gone over everything. I have. So again, guys, thank you for watching. If you have any questions, make sure to leave a comment on the video. I'd love to get your feedback, whether you agree or disagree, or you have a question, I'll try and answer it. And again, if you have not joined the Discord, join the Discord. You'll find the link in the description below. It's a free Discord, and you can talk to a ton of good people there, and it's the easiest place to get in contact with me. Everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care.